you and I have both been pretty consistent with our views and what's coming, and nothing's really changed because it was baked in the cake. I mean, 9 months ago, the economic data, and we've just been tracking that path. You know, all the forward-looking stuff that both you and I use, business cycle forecasts have given us the calling of a recession for a long time ago now, and we're now playing out the latter parts of it. Now, yeah, we can argue and debate how long and how big it is. Now, but I'm hearing more of this kind of mild recession, soft landing calls from people. And I don't know really, I don't really see that. I see short and sharp.
In this highlight, Raoul Pal holds the incredibly controversial opinion that he is actually bullish on the market. He believes the market is nearing its bottom because investors have significantly oversold the market. Make sure you stay until the end because Raoul Pal reveals all the shocking reasons why he believes we are nearing the end of this bear market. Now let's hear what Raoul Pal has to say.
You know, if we go back to 1980, the Volcker one, right? Everyone talks about that as like this terrifying recession. It was actually a really mild one. And the S&P went down 28%, and that was it. It was kind of over and done with. Maybe there's something to do with nominal versus real. That means that prices remain, you know, demand remains higher because of nominal. A lot of the direction is that the inflation weight is less. And therefore, the rate of change of interest rate increases. The Fed are making it pretty clear they're probably going to go to 25. So it's, as you know, in global macro, it's the rate of change that matters more than anything else, not the absolutes. So if the rate of change changes, all of these beach balls start popping out of the water that have been held down by the heavy weight of interest rate rises and that rate of change. That's all gone. So suddenly, you know, emerging markets go up, gold goes up, crypto goes up, equities go up. You know, that whole story. I don't know what the BOJ is doing. I've kind of lost track of them. I almost kind of, I know it's a bad thing to say, ignore it because people over focus on Japan. And in the end, it's still pretty contained. It's not like they're going to let rates go to 2%. So, you know, and are they going to let it all go and just give up yield curve control and walk away? I mean, no, they've just widened the band. Why would they suddenly decide, oh, you know what, we're just going to let interest rates run wild in Japan now and completely destroy everything? But interesting market overall. I mean, you know, it's been a very risk-on week, very risk-on. So think of that beach ball, right? There was another weight on the world, which was the world's largest trading economy was closed. So if you reopen, then the beach ball rises. So anything that has Chinese exposure is going to see a net marginal increase in demand from where they were. So I think it's just that. The question is does China coming back into the world economy mean anything yet to the global economy? My tendency is to think that China tends to lead currently the Western world by about 12 months. So I think if we're thinking of what's happening now, then we've got a 12-month lead time before it starts filtering into the rest of the world as well in some respects. And the rest of the world, the impact on the rest of the world, you know, people are like, well, China's opening commodities. It takes time because the Western demand is still going down. So it's really going to make a difference to the commodity market that so many people are looking at is when all three engines are firing. Europe, China, US. When those three fire, then you've got a potential long-lasting commodity rally, but without it, you've still got one or two of the legs of the stool missing. The inflation picture turned a while ago. I think what we're seeing from this is, if you think of what two businesses of Elon Musk, one is Twitter, one is Tesla. What has he done at Twitter? Laid off tons of staff. And what has he done at Tesla? Cut prices. That's a recession for you, right? That's exactly what recessions are all about. That's exactly what the Fed want to see. They want to see prices come lower. They want to see a rise in or a lowering in wage demand. So, it's kind of exactly as the framework that you and I have been looking at for a while, which is, a recession is coming. And I've lost count of how many, particularly tech companies, have done this now. I mean, it's just endless. I mean, everybody's done at least one or two rounds or three rounds of cutting headcount costs. And prices generally, we've seen discounting. And remember, I think even you and I talked about this, there was a massive rebuild in inventories, excess inventories that were carried into the end of last year. And you kind of knew that after Christmas, anything they didn't sell was going to have to go out the door. And so I think we will see this everywhere, where we see some massive discounting to clear inventories. And again, classic part of a recession. Inventory liquidation is what recessions are all about. I think we'll see a rapid inventory liquidation in the first quarter. I'm actually very bullish. Now, the recovery from a bear market either comes two ways. Either it comes up, corrects, and then eventually goes, or it comes sharper. It depends on central bank action, liquidity, that kind of stuff. But if I look forward, I'm very bullish because we've just gone through the rate cycle, so that's out of the way. So that's good for risk assets. We've marked down everything in value and price. And then we've got, I've been talking about this a lot, the exponential age technologies. We were talking about Tesla, but, anybody's been paying attention has seen what happened to AI. It went from me interviewing Emad to say, oh my God, this is coming, to ChatGPT, to everyone thinking, oh shit, we're out of a job within 3 weeks. I mean, that ChatGPT went from 0 to 1 million users in 4 days. We've never seen anything like it. And it keeps crashing. There's so many users on it. So that's the technology. And we've got tons of these coming. The energy situation that you've been following so closely, the nightmare in Europe didn't pass in the end. It's, we saw what was bad, but, the Peter Zeihan's of the world and others were like, the Europeans are going to be having to be chipping frozen corpses from the streets. That doesn't look like that's happened. Nobody's run out of energy. Yes, there's been some rationing and stuff like that, but it seems to be contained. So also investors were so negative that I've got charts going back to the 1970s, the AAII investor intelligence survey. It was the most negative since 1970 or something crazy. So usually when all of those things happen and we've got liquidity returning, markets are pretty positive. I think everybody's looking that way, and that usually means the opportunities to look the other. There has been various offsets to QT that have been going on that meant liquidity's not been as negative as it could have been. And the Treasury account is one of the big things that can add or reduce liquidity to markets. As you suggest that they start adding liquidity, it all seems to be the start of the change of liquidity that I've been looking for. You can hear the cowbell in the distance, as it were. The Japanese, the large foreign buyers of assets, so it depends where their capital flies to and what happens. I mean, the yen has been screaming higher over the last few weeks and stuff. So I don't really know. I do tend to find that if every hedge fund is thinking there is a special event of which they know something about and nobody else does, it usually means that everybody knows about it. It's, when you've got a lot of people all talking about one event risk, that event risk is priced. So I think it's relatively priced. I don't know. And I think it's only at the margin it really affects US bond markets and European bond markets. I've tended to find that the market has overtraded Japan as a global story. And I found that it hasn't had as much impact as people expect. It's at the margin impact.
If you enjoyed that video, click here to watch Raoul Pal reveal his shocking prediction about crypto's new bottom in the wake of the FTX crash and which crypto he expects to crash next.